Welcome everyone, my name is Jay Michaels. Welcome to the US Fast Tracks YouTube channel. Today we're going to be talking about where to buy in the US. Basically, when you're looking to buy in the US, you got to ask yourself two questions, or one question mainly. It's why are you buying? Is it for personal use or is it for strictly investment? Now most people will argue that your vacation home or your second home vacation getaway is an investment. It definitely is, but the US Fast Track, we focus strictly on investment that chances are we'll never be living in. So we focus on emerging markets. Now what is an emerging market? To give an example, in Canada it's like anywhere like Alberta's a gas and oil sector province, and they've seen huge jumps over the years because of the increase in oil. So that could have been, that's an emerging market. People still say it's like well undervalued and will continue to go up. So that's basically an example. But down here I'm going to demonstrate on the buying cycle, basically real estate cycles in general. Time down here, price over here. So this is obviously just an example, but your basic cycles are obviously a buying cycle and a seller's market and buyer's market. And obviously when you're in a selling market, it's going up, and in a buying market, you're going down. So obviously as an investor, you want to buy low, sell high, which you obviously, in a perfect world, you want to be right down here. But this timeline is anywhere from, it could be from 5 to 20 years plus. So you could be in this little part from here, could take you 20 years. Like right now in Canada, we've seen 14 years since our last really adjustment in the market. This is not everywhere in Canada, but this is, just to show you, in the last 14 years, we're still going right now. We're still in here, and it's not even slowing down. So this is just to show you an example of where you kind of want to be. At some point, in a perfect world, if you can get right down here at the bottom prices, which we've seen that when the market crashed, it's definitely going to help you in the long run for hanging on to it, or when you go to resell, because you bought at the lowest price. There's a lot of markets in the US which are still down here, and it's a great time to get in, which we focus on these emerging markets. You basically ask yourself, why is the market obviously emerging or increasing? And a big factor is going to be basic economics, which is supply and demand. Supply and demand. Now, obviously with an increase with demand, your supply decreases, which causes prices to go up. That's what you want. So you got to ask yourself, why is there a demand for that area? And now your biggest variable there is population, because as population increases, they take up the supply, which increases the prices appreciation of real estate, because there's the demand there. But you got to ask yourself, why are people moving to that area? Nowadays, it's what you're looking for is strong economies. An example in the US is, at one point, Detroit was a thriving market, and because nowadays it's the opposite. It's a lot of people moving out of there because there's no jobs, not like they used to be. So economy, what drives the economy is increase in jobs. And what we're seeing is a lot of people now are also a big factor in where they live is affordability. Because not everyone can afford to live in New York or LA and Florida. Those are very expensive spots to be looking in. how to find out this information is we're in a great age where the internet is, everything is on the internet. So there's a lot of great websites out there that you should be reading daily just to get information on upcoming companies or news that's going on in different areas. Obviously, once you pinpoint some areas of interest, definitely pay attention to what's going on in that, because a spike in when companies start to increase their staffing or expanding in different areas, that's going to do wonders for the economy. So an example is Texas is exactly like Alberta, and they have a big sector in oil and gas. And when new companies are expanding and drilling more and producing more profits, they increase staff, and that increases the economy. When you hear stuff about like if Google's expanding their headquarters, adding 500 more jobs, that's not just 500 more jobs, that's internal jobs for that area. But you got to remember that when there's an increase in 500 people to that area, they're going to be going to the gas station more, they're going to be getting more food at the supermarket, which you need more staffing to accommodate all this. So typically you look at it as like a 5-to-1 ratio. If there's 500 new jobs coming to an area, you times that by 5, and that's how many people are affected. Also, as people make more money, they spend more. So that's a prime example. So that's basically what you got to look for in emerging markets. There's obviously more factors that play a part. This is just some of the basics. But definitely keep this in mind when you're looking for emerging markets. Definitely also maybe give me a shout. I can give you a lot of great information where to kind of look for this information. Also, I have a list of emerging markets that I follow, and I have no problem giving that out. Just email me and I'll get that out to you right away. Thanks a lot for listening. Make sure you subscribe to our YouTube channel, and happy investing. Thanks a lot, guys.